Finding the diamonds. Where are the next billion-dollar business opportunities powered by visual technologies and AI? Google, Apple, NVIDIA, Meta, Amazon, OpenAI, Tesla, Anthropic, and almost every company these days has some sort of visual tech and visual data, which obviously is aligned with our LDV Capital thesis. Our panel of amazing investors at different stages, Julia from London, Jem across Europe, and obviously Julia across Europe as well, Praveen from San Francisco. And at different stages, we're all going to talk for about 40 minutes. First about investing philosophies, and then about visual tech and AI trends, and then a little bit about the future. So thrilled to have all of you, Julia, Praveen, and Jem here. Thank you very much for joining us today. And I think the best thing to do is to pass it to each of you to give a short 1 or 2 minute kind of introduction about yourself, your firm, and where you focus. Julia, why don't we start with you, and then we'll go to Praveen and to Jem, and then we'll kick it off as an interactive conversation, and our audience can ask questions in real time.
Thanks so much for having me. So a couple of short notes about myself. So I'm here because my mom taught me about taking risks. When I was 8 years old, we moved from a council house in Stockholm to Geneva. And I started at the international school, and in my class was Saddam Hussein's niece. So she taught me very early on about taking risks. A second thing about me is that I'm here because of the admissions officer at LSE who decided to give me a chance after they rejected me because I asked them for a second chance. So I invest at very, very early stage. I focus on science and healthcare. My fund is LocalGlobe. We're a leading European VC. We back unicorns at seed, have the biggest track record of doing so, and also companies that go on to become thoroughbreds. Those are companies that are generating over $100 million in revenues or more. And we have 35 of those in our portfolio. For generalists, we back incredible founders as early as possible.
Great. Great to be here, Evan. Thanks for the invite. Praveen Akkiraju. I'm a managing director at Insight Partners. I come from an operating background, ran engineering teams at Cisco for a long time, was the CEO of a company, and then did a startup, ended up getting acquired before I transitioned to the investing side. Insight is a multi-stage fund. We invest all the way from Series A through to buyouts. I am based in San Francisco Bay Area, as Evan, you mentioned, and focus primarily on our deep tech infrastructure investments, as well as specifically focusing on automation. I start investing at the Series A, but my portfolio includes companies such as Postman and LaunchDarkly, Workato, which are scale-ups. Excited to be here and excited to join the conversation.
Fantastic. Jem.
Hi, everyone. I'm Jem. I'm one of the co-founders of Beck Ventures, formerly known as Early Bird Digital East Fund. I'm a founder turned investor. I'm Turkish. I was born and raised in Istanbul, studied in the US, built my first company in the US with very bad timing. Started in 99, survived the crash, ultimately had a nice exit, moved back to Istanbul, started to make angel investments. And in that process, I learned the sort of value of looking at underserved or overlooked opportunities, and decided that that's actually one of the keys to returns in venture. And starting out in Istanbul, I started to get familiar with the talent landscape in Eastern Europe, realized that it was extremely fertile, but then the teams from the region don't always look like what you expect that early stage team to look like, building a global company. So built a venture firm focused on that. So Beck we're now investing out of our third fund. It's a $250 million fund. We focus on seed and A rounds. We build very concentrated portfolios, sort of 15 to 20 companies per fund. And I've been very fortunate to work with fantastic founders of companies like UiPath, Peak Games, Payhawk, Grand Games. So it's been a fantastic journey.
Fantastic. Appreciate all the intros, and that gives everybody a little bit of context. I think at different stages, one of the most important things, and a lot of people are raising capital in the audience, and everybody's trying to learn about how to find the right partners to collaborate with, right investor partners, right co-founders. And I'd love to hear each of you just a sentence or two, very brief. Like, what are the most important personality traits of entrepreneurs that you love to work with? Or I'm sure you meet 1,000 a year or 800 people a year, and all of a sudden you'll see sparks come from one or another. Like, Julia, you're shaking your head. So why don't you just start, and then we'll go to Jem and back to Praveen. Just like, give me just a very short kind of what really gets you excited and why.
I can give an example. So we backed James Stackholm, who's currently building CoMind and also OLX. When he was 17 back in 2019, he was just off the train from Harrogate in New York in North England, and he was on his way to SF to build CoMind. And at the time, it was a non-invasive BCI was what he had in mind. We love working with founders from inception, but I think the kinds of things that I am really drawn to are, one, resilience. I mean, really understanding from a founder, what is it that makes you want to eat glass for 10 years? And what is it that has brought you to this point, that this is the only thing that you have to do? And the second one is really around charisma and storytelling. Why are people going to move countries to come and work with you? Quick answer for me.
Perfect. Who wants to go next? Praveen or Jem? Why don't you go next, Jem?
I agree with both of Julia's points. I'll add one more, which is kind of curiosity. Because I think as a founder, especially in early stages, before product market fit, needs to really be interested in all the signals that's coming from the interaction between the product and the markets it's facing. And I think to have that sustained level of interest has to come from genuine curiosity. If you're doing this as a task, I don't think it works. I think you're doing it because you can't not figure it out.
Yeah, we tend to come in a tick later than Hem and Julia. We're typically a Series A plus investor. At that point, I think for us, what we're really looking at, from my perspective, again, having been on that side of the table in a startup, building products, it's really sort of three things. Like, one is, most importantly, customer groundedness and market groundedness, their ability to really understand and articulate why the customer needs that product, and their context of how the market operates. Oftentimes, we're sort of living in a very unique time right now where there's a fundamental platform shift that is sort of redefining what it means to be a startup, the pace at which startups are being built. And so you're looking for, founders who understand the moment, right? Understand sort of not just necessarily be, a researcher or an expert in AI or what have you, but the ability to kind of understand the context of AI, and how to use this new tool to deliver maximum value for customers, right? So the second aspect. And I think the third aspect really is, at our stage, again, we get a chance to understand how the founder thinks about building a company at scale, the next couple of steps. And so we really spend time on how mature are they in terms of their ability to surround themselves with great team, and how they think about building out the areas where they may not have complete coverage. Obviously there are some amazing founders who do everything well, but typically it takes a team, right? And I think we really try to focus in on the maturity of the founder. Are they comfortable, for example, surrounding themselves with people smarter than themselves? How do they make decisions, right? Some of these things which are more kind of fine-grained, which really define how large, successful companies get built.
And so that's great. So going a little deeper into that, Praveen. So what are a couple of signals? I mean, so everybody, not everybody, but many founders at that stage will have a plan, and they'll have a plan of going about it, and they're going to say we're going to do A, B, and C, but there's going to be one that maybe sparks through. And one, because how many investments do you do a year? One or two, personally?
Yeah, probably I did 2 last year.
Two. So I mean, out of all of them, how do you see that? What is that spark? Is it a way they communicate? Is it the way they follow up? Is it the way? I mean, a little bit into that personality.
Yeah, I'm going to give you a more boring answer because
Okay.
I think what matters. Again, I'll go back to we are in a very unique point in time right now
Yeah.
in technology, in sort of the economy. AI is fundamentally reformatting everything that we kind of took for granted, right? What it takes to build a successful company. What is a successful product? How fast do you release products? What does a team look like? How much do you need to burn in order for you to build a business? All of these fundamental things that we learned over a decade of building SaaS companies is being reformatted. And of course, I'm talking from the heart of the AI bubble here in the San Francisco Bay Area. So when you kind of think about what we look for in a founder, for me, it's really systems thinking, right? What I mean by that is, again, at our stage, at the stage that I engage in, with Series A, they've probably found some form of product market fit. They have a few customers. And there are a lot of the companies who kind of get off the blocks and are able to kind of, these days getting from 1 to 10 million seems to be, on an accelerated path. But what we're really thinking about, what we really focus on is how do they think about the problem space and the product that they're putting together? Because in the AI context, it's really not about just, the platform used to be stable, right? When you were building in SaaS, you built on AWS, you probably use Kubernetes, you had Docker containers or VMware, depending on the kind of use case. A lot of the primitives were well understood. Now the primitives are changing. Every week there's a new model that fundamentally resets what the capability of the underlying platform is. And so you're looking at we look for people who really have a systems thinking. Like, it's not just about the AI. It's how do they bring the data together? How do they bring the user experience in? How do they kind of bring together their domain expertise together to be able to build what we think would be a sustainable business going forward?
Okay, very helpful. Want to jump into the next step from each of you guys, give an example of one of your companies that's leveraging visual tech and AI, and what is unique about them, and then we're going to dig into more details about these different opportunities. Who wants to go first?
I can go. Well, we have a co-investment with LDV, a company called Viptela that's taking visual technology into the healthcare environment, specifically the operating rooms. And what captured us there was with the speed of generative AI and how fast the landscape was changing, the adaptability of the team, where most of the team at Viptela comes from a previous company which applied similar technology to a different environment. So looking into the healthcare environment and of course the massive opportunity around helping first reduce healthcare costs and then improve healthcare outcomes like patient safety, etc. The opportunity size appeared massive. Putting another pair of eyes that's observing everything without interrupting with the medical processes in the operating room sort of struck us as such a no-brainer. And then we had a team that had essentially done this elsewhere. So it ended up being our first visual technology investment, and we're very excited about the developments so far.
Well, Julia, you want to give one of your deep tech ones, scientific ones?
Absolutely. Very happy to. I thought I would talk about Spore Bio as an example of a company that's applying breakthroughs in photonics plus AI plus hardware to enable real-time pathogen detection in multiple industries. So food and beverage, pharma, cosmetics. And it's a phenomenal breakthrough. And I guess what we thought was really interesting was when we first met the company, again, we led the pre-seed and it was just the two co-founders, Amin and Maxime, very complimentary. Amin had actually experienced a food factory breakouts where there was a bacteria that had been detected in one of the pizza factories in Nestle, and so it had been a full recall and actually led to children dying, unfortunately. He wanted to solve this problem, and so had paired up with Maxime, and they had just convinced Mohammed, a second-time founder, to join them as COO. And so it was this combination of this extraordinary team, really skilled to be able to solve this problem. And then we know that the current way that pathogens are identified is using a Petri dish method, and we know how these products are purchased, and so it actually was a much easier way for us to think through how big this company could become if everything goes right. And so that's one that we're super excited about, and they're now live in multiple factory settings. And have deployed their products, and it's going super well.
Very cool. So you got from healthcare and operating rooms to pathogens. Praveen, what's one that you have?
Well, it's one that both of us have, glass
Correct.
imaging.
Cool.
It's a fascinating company. I think if you take a step back, today, most of our engagement with information and with work is through text, typing, whether it's on our phones or computers and such like. We obviously, all of us believe very strongly that the world in the future is going to be more audio and visual oriented. And I think Glass is one of these fascinating companies. They're able to take any image, right, even from some of the best cameras in the world, and dramatically enhance it. More importantly, I think they're able to capture the context of that image. And so if you think about sort of use cases today, obviously they're focusing on consumer cameras and enhancing the quality of the images in your mobile phones. But I think if you kind of play this forward, there are infinite amount of applications for being able to really understand the image in a level of detail that allows decision making to happen purely from an image perspective as opposed to text or voice commands. So I think that's one of those, and obviously I can talk a lot about Glass, and Evan, you could as well, I'm sure, but it's something I'm quite excited about.
Cool. Jumping also to early stages in Praveen, you've had a lot of operating experience scaling big businesses, and one was acquired by Cisco. I mean, as you said earlier, times are changing a bit, or the speed of innovation. I mean, there's obvious differences, but from your feeling of being an operator for years in several companies and now being an investor, I mean, what is the biggest change you're feeling, and how does that impact how you're choosing to invest?
Yeah, it is a time of profound change and rapid change, right? And almost head spinningly fast. I think, again, speaking from sort of the heart of the AI ecosystem here, sometimes we kind of, buy our own, or drink our own Kool-Aid in terms of how rapidly the world's going to change. The reality, I think most startups will find is that for the technology to diffuse beyond, tech forward companies or companies in, startup hotspots, whether it's in the Bay Area or, Seattle, Israel, etc. It takes a long time, right? And so my experience sort of as a CEO, first of a cloud infrastructure company, then in a startup, was that, we found huge markets outside of these tech ecosystems where the real focus of customers was ultimately they don't care much about the technology or the latest model or how many parameters or what the latest benchmark is telling you. They care about, hey, can I do my work better? Is my customer experience better? Can I improve the bottom line of my business, right? And so I think sometimes, particularly in these like massive technology shifts, founders get caught up in the technology, right? And it's almost like a hammer looking for a nail. They're building this amazing platform. So if they're not truly grounded in how the customer adoption and the customer life cycle works, I think that's sort of a failure mode that we've seen significantly. And from my own experience, again, my best region, I always tell a lot of my founders used to be the Midwest, right? And Tola, Texas, Oklahoma, Arkansas, Texas mostly, right? And that region has tremendous amount of industrial manufacturing, companies that are at scale, and they need help adopting technology. So I think you have to take like a more holistic view beyond the technology. And going back to my original point around customer focus, understanding sort of how your customers are able to take that product and deploy it, I think is as critical as building the best and the most capable product and the most differentiated product.
Fantastic. And also for the three of you, feel free to ask each other questions. I'm going to ask one to Jim and then Julia, but we can make it interactive. It doesn't all have to come back to me, and you can ask me questions or whatever. So it's more of that interactive. Jim, so you led the seed financing of UiPath, classic, amazing story. And tell us what they did then, actually leveraging some computer vision. But what was it like, the company then? And a lot of people say, "Wow, that's a great company, overnight success, and it went public, and really quickly." And it probably wasn't. I know it wasn't the story, but from your perspective, I mean, people, there's entrepreneurs that feel like Dick said earlier, is like it seems like the company's perfect and everything goes like along the plan. But did it at UiPath? Did it go from seed to IPO overnight?
Just the opposite. So we met Daniel in 2014, and the company was 9 years old. It was called Deskover at the time, not UiPath. And it was essentially doing a lot of consulting around automation. They had worked on a fairly unique proprietary OCR extraction and abstraction of the screen, mouse, and keyboard of computers. And it took us as a group a while to really digest what they were doing. And our internal sort of shorthand for it was, it's like recording Excel macros, but instead of a single application, you can do this across the entire operating system. So you can essentially automate from Microsoft Outlook to an SAP system, etc. And we thought this was a very big vision. We discussed with Daniel that he should consider venture capital as a way of building this vision. Otherwise, it would probably take too long. And we led the company's seed round back in 2015. And then, alluding to your point, Evan, where things were not going in the right direction, in that the company was, but nobody else saw it. We introduced them to 42 firms for their next round of financing. They got 42 no's, and we had to bridge them by ourselves as the insiders, give them another 2 years or so of runway, and then the numbers started to show, and it became kind of a hot company, and multiple term sheets, and Excel ended up leading the A round, and then the rest is history. We took the company public, or Daniel took the company public in 2021. It was the largest software IPO of that year, which is actually one of the banner years for software IPOs, and listed in New York Stock Exchange. So to your point, I mean, it takes a ton of adaptability, reading customer signals. I mean, one of the key drivers of UiPath's momentum was the fact that they discovered that some of their best customers could also be their resellers, which were these BPO operators across the world, where they were using it for their own back office automation, but then could sell it to their customers. Also, bit counterintuitively, Japan turned out to be a very big early market for UiPath, mostly for demographic reasons, that they couldn't find people to work in these back offices in large corporations. So getting a robot to do it was very important. So nothing goes as planned, and you have to call audibles.
Yeah, and in those days, I'm sure. But I mean, we see it as well. I'm sure all of us see our companies. Some are not succeeding as fast as they want. Usually, it takes a bit longer. But not everybody bridges every company. So why did you choose that one out of others? Or what signals could you kind of give a little insights into the entrepreneurs in the audience? Because it's not an automatic decision. Okay, yes,
Sure.
you get more money. So what was it that what was it that gave you the conviction to double down in that challenging stage?
We felt that the company was just constantly misunderstood, and much of it went to the fact that the team didn't necessarily fit the archetype of a global tech company founder team. This is a group of Romanians, and Julia mentioned charisma earlier. Their charisma is a different type of charisma. They're not the exuberant, charismatic storytellers that can paint a fantastic picture, but they understand their product. They're super excited. They know the capabilities, and they were just struggling getting that across. Being close to the company, we were able to see the developments in the company capabilities and what they were able to accomplish. And of course, we saw the numbers around engagement and how much the products were getting used. So I think it was just some of those signals that are not so obvious to the outside, especially if the picture you're seeing in front of your eyes doesn't fit the model in your mind. We this sort of misunderstood and overlooked opportunities usually, I think, take one more step, one more additional effort to really try to understand.
Very helpful. I want to give a little context and then go to Julia. So, in the early days, I mean, about 30% of our investments are pre-Inc. So given a term sheet before a company's incorporated, the rest is pre-revenue, pre-product, and everybody says we're crazy. But it's all investments in people for us, and deep domain expertise, leapfrog technical solution at the right time. And typically during due diligence, our experts say, Evan, that's physically, technically impossible to do. And then we say, but, if it works, it's huge, it's gigantic. Oh my God, it's going to improve the world. We make a lot of money. That's how we choose, the opportunities. Julia, you do deep tech and healthcare and deep tech startups. Where are you choosing? How are you? We talked about personalities earlier, but sectors and aspects of healthcare, which is tough. How do you choose which teams and or defensibility, or what pieces of the puzzle get you most excited?
Oh, it's always the people. It's always understanding the individuals and trying to understand what is the problem that they're going after and why are they solving that. I think I mentioned Spore and bio just now in terms of what it was that drove Amin to want to dedicate his life to solving that as a problem, pathogen detection. The same James Stackholm building CoMind. What was it that drove his obsession to understand how we understand the brain, the personal challenges that had led him to become so obsessed. And then I think coupled with that, it's also the technical acumen. You mentioned that before, Evan, and the other panelists too. I think really understanding the technical insights that they have. However, I think at the stage that we invest, which is at pre-seed from LocalGlobe, where we lead rounds, I do think you have to over-index on the person, because even if you look at a founder like James, he actually ended up not developing the BCI that we first funded him for. He actually pivoted into focusing on developing a neuromonitor, also based on breakthroughs in photonics. So it wasn't even the same underlying technology. And had we not funded him because of because of that, then we wouldn't be partners on this journey, and then we wouldn't be partners in his next company. So I think you have to trust the founders and give them quite a bit of rope and ability to explore, and then be supportive when they say, hey, listen, I've got this other insight and I really want to go after that. And these are the customer insights that have given me conviction that this is the product that needs to exist. And this is how I'm going to go about doing it. And so I think, that's the journey that is so exciting that you sign up for. So I think, founders first and foremost, always.
Great. Jem, Praveen, anybody want to add anything else to that before I jump to the next questions?
Maybe just a quick add is we also
Great.
love the chip on the shoulder, just the frustration of being underestimated, something to prove. We see that as a commonality around our portfolio, and we like it when we recognize it.
Fantastic. Praveen, you went off mute. You got anything else to add, or I've got one for you?
No, go for it.
Cool. So tell us a little bit about kind of when you were CEO of Viptela and scaling it to 100 million run rate, and then this, Cisco acquisition. What during that phase, I'm sure you had a lot of learnings, a lot of mistakes that you learned from, but is there one mistake that you learned from that you actually try to help entrepreneurs now when you're on the other side of the table avoid? Or there's one that just really resonates that you can share with the audience to hopefully help them avoid the similar mistakes? Because I know I made a ton when I was an entrepreneur for 18 years.
Yeah, it's a target-rich environment. There's a lot of mistakes. That's kind of the definition, I guess, of a startup, right? You learn. I'll share two. I think one
Great.
was, when you're a startup and you're a big customer comes to you and basically says like, hey, we want exclusivity with you, and for that we'll give you X million dollars of a commitment. And I think it's one of those things where you're desperate for the logo, you're desperate for the validation of a large customer, and not to mention the supposed commitment of revenue. But I think one of the things we learned the hard way was, first of all, that commitment was more like a directional, not a hard commitment. None of these commitments tend to be when they're like multi-year, particularly partnerships, right? In this case, it was a large customer who was essentially both a customer as well as a potential reseller for us. And, they had put out a number basically saying like, hey, we could potentially do 20 million with you guys over the next 3 years, as a customer and a reseller. The reseller part was more aspirational. The customer part obviously was a little bit more grounded. So we kind of did the trade with the devil and signed an exclusivity with them. And that I think was a huge mistake. When we thought about it, as we scaled up, it locked us out of, a couple of their competitors who were potentially big customers for us. But more importantly, it enabled our competitors to go after them, and actually enable the competitive ecosystem. So that was a really big mistake. I think the second thing is more around people, which is, it's a tough one, but you have to fail fast on people, right? You need to really, so particularly on the sales side, go to market when you're ramping that. I think it's always hard when you make decisions around people, but it's just something that you have to be very judicious. You will make mistakes when you hire, and it's just sometimes when you're a small team, you cannot afford to have non-performers, right, slowing the rest of the team down. So those would be the two ones for me.
Absolutely, totally. I made a ton of mistakes, and I try to help our entrepreneurs avoid them. But and as we were talking with Dick earlier in an earlier session, the same advice is not the same for all entrepreneurs. Everybody's going through different stages of different challenges, and it's actually this kind of almost real-time decision making, which is actually really important. And so that next topic we touched a little bit earlier, but real-time decision making almost from all of us. With the speed of innovation today, and everybody for years has said innovation is going really fast, but it feels like it's going faster in certain aspects today, and some are still going slower in certain industries that we're investing in, like the mining industry or construction industry. Like the actual legacy industry is still going slowly, but the software for them is exponentially increasing. So I'd love to hear from each of you. Like, what are you changing anything, or what are you in the process of thinking about changing about how you invest as a venture capitalist? Because the amount of change, of rebuilding and having competitors crop up sometimes faster. How is this changing your kind of approach? Maybe Julia, you want to start with that, and we'll kind of circle back.
Yeah, well, one thing that I've been thinking about, which is maybe counterintuitive, but when it comes to healthcare, what I really see is that the science around diagnostics and around early detection and prevention is so advanced and is excellent. And so we have incredible science. We also have consumers that are now actually pulling and are demanding better science, better answers, because the system hasn't yet caught up. And so I guess this is what is so exciting to me about companies like Oura and Whoop that are integrating advanced diagnostics into their products. And it's really driven by consumer demand. And so I think the consumer, the individual, is becoming increasingly important in healthcare, and in particular within this field of prevention and of and longevity. And so it's not necessarily driven by AI, but it's accelerated because people are becoming much more informed. And I think in healthcare, what is interesting is that individuals are showing up to doctor surgeries not looking for answers. I'm coming already knowing. I already know what I have, and I already know these are the clinical trials that are available to me. And so I think it's impacting the role of the clinician and the role of the healthcare system. And I think these are the things that I'm thinking through in terms of the second order effects of the consumerization of healthcare.
Fascinating. I love it. Great. Jem, what do you think?
Well, I think we've changed two things in how we deal with this increased pace of change. One is I think we are going slightly earlier in our investments. So we've always been sort of seed and A focused, but recently we've written pre-seed checks, sort of similar to sort of pre-product, pre-revenue, which was rarer in our first two funds. But the second and perhaps more important thing is we're starting to weight adaptability higher in our evaluation process. I mentioned we build concentrated portfolios, so we consider ourselves a high conviction investor, and sometimes we wanted to see, of course, we want to see conviction from our founders, but also a bit of like a certainty about the direction that they were going. Today, I would, if I saw that certainty in a founder team, that would make me worried because things change so fast. That would probably be a bit of a flag. So we're trying to assess adaptability within the team and weight it higher in our evaluation of a company.
And regarding that, so how do you compare adaptability when you look at two different founders, two different CEOs? What are the signals? Is it in the amount of time that you're actually interacting with them, a month or two, or how do you what is the kind of to dig into that a little bit?
We spend more time with the sort of origin stories of the companies, the journey that took the team to the point that we're meeting them. What have they learned? Where have they adapted, if they have? Sometimes that's not always there. It hadn't. It doesn't mean that they'd had to gone through that sort of iteration and pivot processes. But we look for signals. I mean, it's not always there. But to the extent that we feel that adaptability is an important another factor is the diversity of the team in terms of the roles they can play. So if if another aspect of that space became more important for that business, are there strengths within the team that can then step in and lean in that direction? Should they face that type of a change impediment?
Got it. Okay, that's helpful. Praveen, what would you say?
Yeah, I mean, I think one of the things, again, this is an interesting cycle, right? I mean, you see founders of all types, unconventional founders, right? You have researchers, professors turned entrepreneurs, people who've spent like 20 years in academia, have come out, started a company because they have a phenomenal idea, phenomenal technology that they want to take to market. You have, the classic sort of YC profile, 20-year-old dropouts. And we actually funded one of those companies, to MIT, friends who dropped out, and it's a company that's just doing amazingly well. I can't say that, I was not, terrified when I was writing that check, but betting on founders that young. But I think you have to keep an open mind, because what is really important is sort of as I mentioned earlier, the three things that we look for, like, context and team, and the ability for them to adapt and learn, what basically Julia and Hammett basically said earlier. So I think in this cycle, more so than ever, newer ideas. We used to have this archetype of like a domain expert, right, who spent a lot of time in a particular space, would make an ideal founder to go, disrupt that particular space. And I think what we're finding is that may not exactly be true. Now, I think the flip side of that is, if you're investing in a pair of 20-year-olds, or an academic professor, or a two-time founder, each of these require very different muscle as an investor in terms of how you help them. Because ultimately, as investors, our job is, not just to provide the capital, right? Is to kind of help in that journey. Obviously, the entrepreneurs and founders are in the driver's seat, but we as investors, particularly in the earlier stages, have a role to play in kind of helping them. And you have to like really calibrate your strategy based on who you're working with. And I think that's, part of the fun and part of the frustration as well.
That's a little bit of both. Keep with you, Praveen, for the next question. So obviously a lot of talk these days of agentic and applied AI and agentic AI and its impact, positive or negative, on SaaS businesses. And so we talked about, I think we were chatting on a phone or text message early, a couple of days ago about this. I mean, so this is your sweet spot as an entrepreneur, as an investor. So how are you feeling about the impact and challenges, or is it more of an opportunity than a challenge?
Yeah, it's obviously a question that we spend a lot of time on, right, at Insight, because we have 500 companies in our portfolio. We're a 30-year-old firm, so we've been investing in multiple cycles of technology. I myself have companies that I've invested in the 2021 cycle, which are obviously very much grounded in SaaS, as well as a few AI native companies over the past couple of years, which are completely architected differently, whether it's founders or just kind of structurally. So I think at this point in time, every founder, every CEO is sort of captured by the moment, right? They feel this profound sense of urgency to be able to kind of transform the business using this new tool called AI. Now, I think there's a need to separate the hype from reality, right, and use customer value as a lens. But ultimately, I think every founder, every CEO, whether it's 5-year-old, 10-year-old company, or a 2-year-old company, is asking the question, how am I staying ahead of this sort of wave of technology innovation that's coming at us, and how is that relevant to us in this particular in our particular context, right? And so I think independent of the headlines of like X number of people being let go, etc., I think the real question is what does AI mean in the context of your business, whether it's building product, whether it's productivity, whether it's being able to sort of reach out and change the customer experience that you have or expand into new markets. And I think that level of thinking is what we're driving actively in a lot of our companies, and luckily I think most of our founders feel that already. So it's more
Sure.
along the lines of what we can do to help them in that in this like great transition we're in the midst of.
And also in this transition, also on the technical side, I mean, you're a deep technical individual, and to date for years there's been kind of unique data sets, but over time these unique data sets are were verticalized or very siloed, and so we talked a little bit about kind of the opportunity of we think also from LDV, but even later states of where's multimodal kind of opportunities, and is that going to be a whole nother chapter of differentiation and defensibility that we haven't seen yet?
Yeah, I mean, I think one thing that's interesting, right? So, the whole promise of AI is that it changes the way we do work, right? It can actually do work for us. So what does that actually mean? I mean, of course, having a domain-specific data set makes a ton of sense, but it's really sort of the differentiation is being able to capture that essence of work, right, in your agent or in your product. And there's like so many ways you decompose that. In this notion of like computer use agents, for example, is actually a key point of differentiation, because how the agent actually navigates the world turns out is very unique depending on different kind of use cases. And just throwing in a general purpose computer use agent is probably not going to differentiate you as much as being able to be thoughtful about what does that workflow look like, and can you capture that in the way your agent uses the tools or computer use, et cetera, to be able to kind of get the task accomplished. And that sort of capture effectively gives you a better sense of differentiation. So that's what I mean, like by systems engineering, the point I made earlier is like you have to really think through the piece parts of how your product is structured, right? You no longer can assume like a baseline of, okay, I got a whatever containerized system running in the cloud, and all I need to do is to kind of figure out how I provide a better economic value to the customer, which is kind of the whole SaaS paradigm, right? So
Right.
We're now at first principles level of product design.
Okay. We were talking about multimodal. I'll switch it real quickly. We got about 3 or 4 minutes left. Julia, photonics. You and I talked a bunch about photonics, and that's not something everybody talks about. So why are you so excited about photonics like we are, but from your perspective?
Well, it's such a good question. What is so exciting about light? I mean, light. I think it's an incredible medium for transporting data. Light can move more data than copper. It can therefore measure very, very small changes in chemicals within the body. It can probe the body without surgery. And so it just opens up entirely new paradigms and business opportunities that were previously measured in very antiquated ways. And so I think photonics is the breakthrough that enables that enables the measurement of these bacteria completely in real time, and also just directly on the factory floor. It's also the breakthrough that enables CoMind's non-invasive neuromonitor, so non-invasively measuring parameters in the brain, but also any other part of the body for that matter. And also in terms of Modulite, another portfolio company, what they do is it's an opsin that when stimulated by light turns on or turns off different pathways in the brain. And so there are completely new ways of treating really difficult neurological disorders. So I think, that's why I'm excited about photonics.
We agree with you on those topics, and also photonics opportunities in data centers and the
Yes,
infrastructure of the world is even beyond
totally.
healthcare that hasn't even. And so that's, what frequently a lot of people say, well, aren't you worried about AI's commoditized everything? No, the
No,
infrastructure and the legacy businesses and there's so many different industries that are ripe for disruption and empowerment for the next, I say 50 years, and everybody said, "Oh, the AI is, it's going to be everything's going to be AGI, and then within the next 10 years." But I don't believe it, and I think there's tremendous opportunity still. Let's end on two last questions. One is, if each of you had to choose one industry on this topic, what's the one industry that you're most excited to invest in people that are working in? Just choose one industry. Jem.
Um, the financial, the economic infrastructure that will support the AI economy when machines are transacting very fast between them with very small amounts. That seems very interesting and sort of AI agnostic to me.
I love that. We got to find ways for my AI agents to have enough trust and certification so they do what I want when I want and not kind of go rogue. Praveen, what's one sector or industry that you're most excited to invest in people?
Yeah, I mean, maybe my answer is less about a vertical, more about sort of a horizontal platform. I think this notion, again, as I mentioned earlier, I think AI is going to redefine work, and so we are looking for companies and platforms that kind of are able to rethink how work is done, whether it's in an enterprise context or a vertical context or a functional context. That sort of tends to be where we spend a lot of time, because that obviously is the biggest bang for buck. And if you kind of look at the earliest sort of success of AI is in the realm of coding, and potentially by December humans will not be coding anymore, right? In some of these companies. So I think we can see what AI can fundamentally do, and so that sort of being able to redefine work is kind of where I'd spend time on.
Love it. Julia.
For me, it's healthcare. Uh, as an industry that takes up between 10 and 20% of GDP, but where our outcomes are actually worsening. People are spending longer time in ill health. It's not getting better. The challenges are systemic, and I think what is exciting now is just this enormous potential of technology. So what was previously impossible is now just hard. And I think that's why we have founders, whether it's first time founders or second time founders, solving really big problems in healthcare, from whether it's clinical workflows, whether it's clinical trials, even through to manufacturing and supply chains. I'm interested in the full stack.
Cool. Well, we are interested in all of those that you guys have said. As I mentioned earlier, the kind of new material science and the mining industry and how they actually are going to work together. We like these really dumb, boring, huge industries that can be empowered by people and technology. On that note, I want to thank all three of you, Julia, Jem, and Praveen. Thank you very much for a fantastic panel.